Today's video is about 5 types of mortgage loans that are available and what the qualifications, limits, and other essential details specific to Oklahoma are when purchasing a property. We hope you come away with increased knowledge of the different loan products available, and it helps you determine which loan is perfect for you. The Oklahoma City Metro has many highly capable mortgage loan companies and lenders, and each can have a slightly different arsenal of tools available to help you get qualified. There are so many different loan programs available from one lender to another. Your credit score and financial stability has a lot to do with what is offered to you. If you hang around to the end of this video, I'll give you a nugget of advice that might keep you from derailing your home purchase. Hey everyone, if this is your first time on our channel and you want to know everything about buying and selling in Oklahoma City or one of the many suburbs, consider subscribing to our channel and tapping the bell for notifications so that you can be the first to learn everything you need to know about the Oklahoma City Metro. Please share your thoughts in the comments section. Ask questions. Your feedback is invaluable as it helps us create content that you truly want to watch and that brings value to your life. Hello, I'm Richard Lemons with Encore Realty in Oklahoma City, your go-to real estate agent in the Oklahoma City Metro. We get calls every day from people just like you looking to buy or sell in the Oklahoma City Metro or one of the many suburbs, and we absolutely love it. Whether you're moving in 9 days or 90 days, it's never too early to start a conversation. Give us a call, shoot us a text, or send us an email, and allow us to make your move to Oklahoma City Metro seamless and stress-free. Now, let's get into the 5 common mortgage loans used in Oklahoma. I can't stress enough that there are many mortgage products available and many exceptions. Our first loan, FHA. What is an FHA loan? FHA loans can be obtained for a new home or refinancing an existing home. These loans are backed by the United States government and offer lower down payment requirements that can be as low as 3.5% and have more flexible credit score requirements than conventional loans. FHA loans are assumable, which means that you as a buyer could possibly assume the existing mortgage under the same terms that the seller has. This might be beneficial if the seller secured a loan at a low interest rate. If you have a credit score of 580 or above, you may qualify for a down payment as low as 3.5%. Now, if your credit score is between 500 and 579, the FHA may require a larger down payment. Oklahoma does have some programs that may provide down payment assistance or grants to eligible borrowers. Other requirements to qualify for FHA is stable employment for the past 2 years. You'll need pay stubs, tax returns, and bank statements to show proof of income. An additional financial requirement is meeting the lender's DTI or debt to income requirements. The mortgage lender wants to make sure that you are a good risk prior to lending. The property must be your primary residence and meet FHA's minimum property standards as determined by an FHA appraisal. Single-family homes, duplexes, triplexes, and fourplexes are all eligible, as well as some condos and manufactured homes. Another benefit of FHA loans is that the seller can contribute 6% of the home purchase price towards closing costs, prepaid expenses, discount points, and more. Keep in mind the seller is not required to help you with anything. The next loan we'll be discussing is the VA loan. This loan has a requirement that you must be a military veteran or an active duty service member that has served at least 90 consecutive days, or active National Guard or reserves. An unmarried surviving spouse of a veteran who died in service or due to a service-related disability is also eligible for a VA loan. A COE or certificate of eligibility will be required to verify eligibility for a VA loan. A mortgage lender can obtain the COE on your behalf should you desire. The financial requirements are slightly stricter than the previous loan program in that most lenders prefer a credit score of 620 or higher. However, some lenders may approve loans with scores as low as 580. Typically, a debt-to-income ratio of 41% or less is required. However, some lenders may allow a higher DTI ratio if you have a high credit score or additional savings. One additional financial requirement the VA requires of borrowers is that they must have a certain amount of residual income left over after paying monthly expenses. This ensures that they can live comfortably after living expenses and mortgage payments. The property requirements are much like the requirements for the FHA. The property must be the borrower's primary residence. A VA loan can be used for single-family homes, multifamily homes, fourplexes, townhouses, manufactured homes, and condos if approved by the VA. In the state of Oklahoma, there is no maximum loan amount for veterans with full entitlement. Should you have partial entitlement, the loan limit is currently $726,200 and a down payment may be needed if the entitlement is not fully restored. Oklahoma allows sellers to contribute 4% of the home selling price towards some closing costs and concessions, which can help make the buying process more affordable for the veteran. I mentioned earlier that the sellers can contribute towards some of the closing costs. The VA does not allow the seller to contribute toward the VA funding fee, appraisal fees, or inspection costs. There can be some downside to using your VA home purchasing benefits. The VA funding fee is a one-time charge paid to the Department of Veteran Affairs of 2.15% if using it with no down payment scenario. The VA funding fee percentage is reduced depending on the amount of your down payment. Also, the strict appraisal requirements of the VA may slow closing. In some situations, and depending on your individual financial goals, using a traditional loan may be a cheaper route than using the VA loan program. Trust your lender to guide you through what is best for you and your family. Number 3 on our list is the USDA loan. The USDA loan is a government-backed mortgage program offered by the United States Department of Agriculture. The purpose of the USDA loan is to assist eligible low to moderate income families purchase a home in a designated rural area. The USDA loan program has a map available online to help you determine if the home is a USDA designated area. Some of the key benefits of the USDA loan is 100% financing, meaning no down payment. The USDA loan has oftentimes lower interest rates than conventional loan rates. Private mortgage insurance, or PMI, is typically lower than conventional loans. There are financial qualification requirements in Oklahoma to obtain a USDA loan. For instance, in Oklahoma County, the household income must be at or below 115% of the area's median income of $103,500 for a 1 to 4 person household. Most lenders prefer credit scores of 640 or higher. Of course, there's always an exception if the borrower has significant savings or a high credit score. Manual underwriting is also possible for applicants with a credit score below 640 if they demonstrate strong credit in other ways. The borrower must have proof of steady employment for at least 2 years. Verification documents will be required, and the borrower must have a front-end debt-to-income ratio not to exceed 29%. The front-end method uses housing expenses only, which includes mortgage payments, home insurance, and taxes. Now, the USDA uses a second type of debt-to-income method as well. It's called a back-end ratio, and it includes all monthly debt obligations like housing expenses, credit cards, student loans, car loans, and any other monthly debt. A USDA-approved appraiser will ensure that the property meets standards required by the USDA. There are no maximum size, but the property must not have income-producing amenities like a farm, barn, or a commercial building. Let's dig into that just a little deeper. The USDA does make exclusions to income-producing attributes as long as they are minor and incidental to the residential use. What does that mean? Barns and sheds are okay if they are used for storage or personal purposes. The barns and sheds can't be rented, used for commercial farming. Take nothing as the gospel. It would seem that there's always an exception to every rule. Consistent with other loans, USDA allows the seller to contribute up to 6% of the purchase price towards closing costs and prepaid expenses. These expenses can include origination fees, title insurance, escrow fees, and more. So, let's recap the high points of the USDA loan in Oklahoma. No down payment is required, which means 100% financing, lower PMI, competitive interest rates, and flexible credit requirements. Fourth on our list is the Section 184 Native American loans. This program is managed by the U.S. Department of Housing and Urban Development, or HUD. It was designed to increase home ownership opportunities for Native Americans, Alaskan Natives, and Native Hawaiians. Oklahoma has a large presence of Native Americans that take advantage of this program for purchasing an existing home, new construction, rehabilitating a home, or refinancing homes, both on and off native lands. The key feature of this loan program is the low down payment requirements. Borrowers can expect down payments as low as 1.25% of the sales price on tribal trust lands and 2.25% on fee simple lands. Two additional features are that this loan does not require PMI or private mortgage insurance, and the borrower has access to competitive rates which are typically lower than conventional loans. To qualify for the Section 184 loan, the borrower must show proof of enrollment in a federally recognized tribe. This typically involves providing a tribal ID card or a certificate. Now, for the financial requirements, most lenders require a credit score of 620 or higher. Again, with some lenders, they may consider lower credit scores if they're able to meet other financial criteria. The borrower must demonstrate proof of steady employment over the last 2 years. The Section 184 loan can be used to purchase single-family homes, including new construction. This loan also allows purchasing of townhouses, condominiums, and permanently affixed manufactured homes. This loan also allows the borrower to improve on or repair an existing home. The Section 184 loan program allows for seller assistance, which helps with reducing the upfront costs for the buyer. The maximum seller contribution is 6% of the purchase price to help with closing costs, prepaid expenses such as the title insurance, recording fees, prepaid taxes, and insurance, and funding points, of course, to buy down your interest rate. Wrapping up Section 184, this loan can significantly lower the upfront costs related to purchasing a home. The key takeaways are very low down payment requirements and no PMI, competitive rates, and seller assistance of 6% of the sales price. The Section 184 loan program benefits many Native American communities in Oklahoma. The conventional loan is the last mortgage product that we'll discuss. Unlike the previous loan products, a conventional mortgage loan is not insured or guaranteed by a government entity, such as FHA, VA, or USDA. The conventional loan is offered by private lenders that adhere to Fannie Mae and Freddie Mac guidelines. Some of the key features of the conventional loans are fixed and adjustable rates with various term lengths. This loan can be used for primary residences, second homes, and investment properties. PMI is required for down payments of less than 20%. To qualify financially for a conventional loan, most lenders prefer a 660 credit score or higher. Borrowers with credit scores above 740 often receive the most competitive interest rates. Eligible property types include single-family homes, multifamily homes, up to a fourplex, condos, townhomes, and investment properties. This loan product allows for a minimum down payment of 3% of the sales price and currently a maximum loan amount of $766,500. Conventional loans offer various options to suit different borrower needs. Here are some common types: fixed rate mortgages, adjustable rate mortgages, and jumbo loans. needed for higher value properties. The conventional loan is ideal for borrowers who have excellent credit and at least 3% of the sales price for their down payment. Well-qualified buyers often encounter fewer barriers with a conventional loan and tend to be processed more swiftly. It's extremely important to begin working with a mortgage lender early in your house hunting process. The lender will provide you with a pre-qualification letter, which is nothing more than an initial evaluation of your credit worthiness. The pre-qualification letter gives you a realistic idea of what you can afford. By providing this letter to your real estate professional, it will allow him or her to tailor the home search to your budget. You will also have a better understanding of what you'll need to budget for expenses like closing costs, taxes, and maintenance. Other benefits to having the pre-qualification letter demonstrates that you are a serious and credible buyer, which makes your offer more attractive to the seller. It'll give you a competitive edge over buyers without a pre-qualification letter and give you more negotiating power. Now, at the beginning of this video, I teased that I would give you a nugget of advice that would keep you from derailing your home purchase. So here it is. Once you've received your pre-qualification letter, make sure you don't change jobs, quit your job, or make any expense purchases on credit. Why? Your pre-qualification letter is not a guaranteed commitment to loan you money. The mortgage lender will re-verify all financial and job information prior to closing. Purchasing a new car or furniture for the new home or on terms could cause you to not qualify for the new home loan. Remember, if you're turned down by one lender, don't let that be the final no. As I stated earlier, different lenders have a host of different tools in their arsenal. Go visit with another lender and see if they have a different view of your situation. They may have a loan product that the previous lender didn't have available. One other thing, I want everyone to understand, find a lender that has the heart of a teacher. In other words, the better lenders will help you understand your financial situation and give you specific steps to improve your financial situation. They really do want you to be able to have a home ownership. If you need a recommendation for a local lender in the Oklahoma City market, I'd be happy to share several with you. If this is your first time on our channel and you want to know everything about buying and selling in the Oklahoma City area or one of the many suburbs, consider subscribing to our channel and tapping the bell for notifications so that you can be the first to learn everything you need to know about the Oklahoma City Metro. Please share your thoughts in the comments section. Ask questions. Your feedback is invaluable as it helps us create content that you truly want to watch and that brings value to your life. We get calls every day from people just like you looking to buy or sell in the Oklahoma City or one of the many suburbs, and we absolutely love it. Whether you're moving in 9 days or 90 days, it's never too late to start a conversation with me. Until next time, have a great day. Bye now.